Market watcher David Nicholas thinks of this, Nicholas Wealth Management. You know, David, I'm wondering if the good news we got today on jobs is actually the bad news it's quasi-interpreted to be in the market, and that those 678,000 extra jobs put further pressure on the Federal Reserve to increase rates, and not just a quarter point, it's being interpreted that way. What do you think of that?
Yeah, it's interesting, Neil. I mean, the Fed's in a hard place here, right? Because they've got to balance what we're seeing as job growth here in the U.S., which obviously that was pretty robust. But they've got to balance that against the geopolitical risks that's also going to put pressures here on the job market as well. So, I mean, at our firm, we think it's still going to be a 25 basis point hike coming up. It seems like the Feds have already essentially alluded to that. But yeah, I think that the Feds are really going to have to figure out how they don't mess this up more than they already have. I think they were late on getting here. I don't think the markets are going to respond well if they really start to do significant 50 basis point hikes this year. So I think the Fed needs to go slower, be calmer about this, because again, the markets are already facing pressures. We've priced in a 25 basis point hike. I don't think we fully priced in a 50 basis point hike. So that's what has me concerned as far as the Fed is concerned.
I'm wondering too, where this goes. I mean, we're just looking at a basket of all types of commodities and reporting that from oil to agriculture to lumber to you name it, that basket index is the highest it's been since 1970 when Richard Nixon was president. And the direction continues to point north. How bad does this get? And how do the markets digest that if it isn't going to end anytime soon?
Yeah, Neil, this is what has me concerned. So world order essentially changed overnight, pretty dramatically, pretty violently. We've talked a lot about how this war is going to impact oil prices. But what really has me concerned, and you just alluded to it, is wheat. Okay, if you look at Russia and Ukraine, they export about 30% of the world's wheat. This week, wheat prices have surged 30%. And this is really when we say it's the supply. We already had issues going into this, right, with COVID, with the economy coming back on board. But when you throw in the two countries that are some of the two largest exporters of wheat, what this is going to do, I think it could potentially lead to the largest disruptions of wheat exports in history. And this has far-reaching effects, not just for U.S. markets, for poverty across the world, right, as food prices surge, which I hope I'm wrong. But the setup, Neil, is not looking good for commodities. This has far-reaching effects. The West is really at this pivotal moment of, do we risk disrupting our own lives and comfort, right, when it comes to what we pay for our oil, what we pay for our food prices, or do we have to have some short-term pain to make sure that this does not escalate further? Because if we do get disruptions with wheat, that's really where I think, Neil, some of us may not be realizing what that could do to third world countries, for countries even like China that imports a majority of their wheat. This really, the impact's pretty big globally. So obviously we're watching this, but I think it means more volatility in the market short term. But it's these macro issues like commodities, like you mentioned, that are really going to hit consumers globally and also here at home.
Well, you're right about all of the above. I just hope you're wrong about the direction and how long it goes. But David, you've been an uncanny read, so we'll watch it. David Nicholas, Wealth Management CEO, and that